Morning, everybody. I'll give you a update on Alliance. Can I get this operating? Sorry? Oh, you don't have the presentation? Oh, okay. I do have it, but I have to come back and go and find it. I thought you guys had it. I'll give you an update without the presentation. There's I guess recent news anyway that's not even on the presentation. Just this morning we announced that we did a $32 million placement for both construction and exploration funding. That placement was taken up by two existing shareholders. That's Galaxy Resources have gone from 4.7% to 11.8%. And Juntal Special Motors has gone from about 6.4 to about 9% equity. So that $32 million enabled us to get on with some of the upgrade and fines projects that we've started to work on, and that'll enable us to increase our production rates going into next year. So I guess the key things about Alliance that are relevant to this today is that we're both ASX listed and SGX listed. We're on the SGX Catalist. We're the biggest trading, we're the highest trading stock on the Catalist. 2017 and 2018, we had the most volume of any company on the Catalist in Singapore. The merger between the Australian company Tawana and Alliance, which were both 50-50 joint venture partners in the project, happened December. So that was a long, painful process that you do when you merge companies. That happened. That in that process, Alliance listed on the ASX. So we haven't had a long history on the ASX, but it's starting to get some traction now, and get some traction again in Singapore. And I guess allowing Galaxy and Juntal to increase its equity means we have also two parties that are shareholders that are experts in the sector, Galaxy on the production side and Juntal on conversion side. So that helps our pool of knowledge going forward. Back a month or so ago, we announced a MOU with Juntal to get involved with downstream. They have a large conversion plant in Yishang. It's one of the biggest in the world. It's one of the cleanest in the world. It's a low emissions plant or zero emissions plant. And one of the trains there is used for our product at the moment for the JBJ joint venture, which is between them and Burwell, where they just buy the product from us. The joint venture would be for the second train, and that allows us to share in the margin that the hydroxide guys get. So what we do is we supply our spodumene at cost, they supply their conversion at cost, and there's a margin, a sales margin, and we split that equally. So the good thing about that, it gets us into the downstream this year. Certainly in terms of commissioning starts this year. We probably won't sell much, if any, this year, but maybe next year. Early next year, we'll start our certification process. And that will allow us as a miner to be one of the first, without any capital expenditure in the processing plant, because they cover the capital for that, to be in the downstream. So we still have some uncommitted spodumene from our production profile, and we are in the process of discussing with other off-takers about that at the moment. So we're going to have both traditional sales through spodumene concentrates, and we will have downstream involvement as well. And that will certainly add to our knowledge base as well as we go forward. We've even had some discussions with potential buyers and potential partners on even in the future, some downstream in Australia. Maybe an intermediate product. You'll hear a bit more about that as we're starting a feasibility process on that at the moment. It's not for now, it's for down the track, but it's all about knowledge in this sector. And one thing we've learned is that our product is very good. Very, very good. We probably sell the best quality concentrate in the world, and that's because our chemistry is very good, but our particle size is coarse, so we don't have an issue with fines in our concentrate. We have the lowest moisture content of any concentrate. We have the lowest iron content of any DMS concentrate. We have low mica and low potassium. Potassium is a headache for the converters, for the companies that want to produce hydroxide. They don't like potassium, and ours is the low potassium concentrate. So, and we've learned all this in the last 12 months, what's driving the customers, because the customers, it's more relevant now than it is last year, because the margins were so good last year, it didn't matter. But obviously the converters have got, their margins have been squeezed. They are hurting, we're all hurting. And it's the quality of the concentrate makes the difference for them. So obviously I believe the prices are going to be tough this year for spodumene. But I think there's a number of conversion plants coming on stream, good ones, that will need to be fed, and I think we'll get some recovery next year in pricing, certainly for good quality product. Exploration, I guess the key for us is that we have a short mine life. We have less than 10-year mine life. We want to grow the mine life, and we have to get back to drilling. We haven't really done much drilling in the last 12 months. We will crank up our drilling again and grow our resource and grow our reserve. So we'll have a reserve upgrade this year, and a resource and reserve grade upgrade this year, and maybe early next year we'll have another one. So we'll just keep plugging away. There's a lot of exploration potential at Bald Hill. Because the project was brought on so quickly, we didn't have much time to do drilling. And we've drilled, I worked out, about 0.2% of our tenure at Bald Hill so far. So I think there's years of drilling ahead of us as we grow a long-term project at Bald Hill that produces a good quality product. We're a relatively high cost producer, so we have to keep an eye on our costs, and we'll drive our costs down through two methods. The main way to drive our costs down is through increasing our concentrate production level, and the normal, now that we're at full run rate for stage one, we can now look at cost measures as well to save a bit of money on the cost side of the profile. So it's a pretty interesting story, pretty exciting really stage in our development. We are the first of the new wave of lithium miners, which started last year. There were 3 mines that came on last year. That's created a bit of a wall of spodumene, I think it's fair to say. I don't see too many projects in the pipeline. Obviously, Wagener's in the pipeline, but Albemarle is going to control that so it doesn't find its way to the market, I think, from the messaging they've put out. Kidman, it would be the next mine that was likely to come on in the next year or two, and that looks like it's Kidman's going to go the way of Wesfarmers most likely. So there's very few projects that are out there that are not controlled by the majors in the sector, and we're one of those that's in production. So there's a lot of exploration players around the world, but many of those projects will never see the light of day, or won't see the light of day until the big ramp up in demand in several years' time. So I don't see too many projects coming on in the next 2 years, and we're one of the only ones that are not controlled by a sector major, and we are, the ones that produce the best concentrate in the world. So that's why the people like Juntel and Galaxy who know the sector appreciate that, and that's why they've increased their equity.
Absolutely. One of the points you raised there is about the quality of your spodumene. Mm-hmm. Do you want to just explain a little bit about why that is so important when you're trying to produce hydroxide?
It's important for 2 reasons. The transport costs, as the price is weak, the transport costs add up. Secondly, the conversion companies don't have much margin to play with anymore. And so if it costs them another $1,000 to process a low-grade concentrate, it makes a difference. So for them, it's cost saving on the processing when the margins are tight.
And obviously, Galaxy in their early days had some trouble with the quality of their spodumene concentrate. So I guess they, more than anybody, knows the importance of buying into a good quality asset.
Yeah, I think they've, as you said, as much as anyone knows the difference between a good con and they also have the benefit. They have similar to us. They don't have much fines in their concentrate. So I think the fines are as much a problem as the chemistry. So theirs was more of a chemistry issue, not a fines issue. Fines are proving to be probably more of a headache than chemistry. And both these mines, both their mine and our mine, don't produce fines.